objective truth versus relative truth. Which one is at play in the option markets? Let's dive into this baby on the workshop after the bell. I was waiting for the music. Dang it.
So was I.
Yellowstone music was coming. I was going to throw the cowboy hat on and everything. I have it now. Unbelievable.
I don't know if Jason's more disappointed or I am. I mean, this is just
I know.
letdown.
I'm more disappointed in the production staff.
Uh-oh.
Ooh, shots fired.
They were the Emmy-winning production staff you have. And
That's right. Unbelievable. Good morning, first of all. We've been busy doing things the last couple of weeks, so we had a few reruns, but we're live today, which is wonderful. I'm going with the kind of orange Halloween theme a little bit on top.
Do you dress up, Lex, still? You dressing up tomorrow?
Some people say I dress up every day. But yeah, I'm going to dress up. I'm going to do something. You know, I've got a big boy dinner tomorrow night, so I'm not going to be around. What do you do with the candy when, you know, you're not home? You put the candy outside in a bowl? Because we did that one year. I told my wife, I go, okay, you realize that the first group that comes up, they're going to just demolish the candy. It's going to be gone. So sure enough, you know, we have cameras, so we saw that little escapade take place on Ring or something like that.
I have never not been home and distributed candy. Like if I'm not home, I'm not giving anything out.
Yeah, I worry about, you know, there's always lights on now. You know, everything's electronic, so you put lights on and make it look like people's homes, so that, you know, I'm worried.
We always have somebody. I love giving the candy because we have the candy and we have the toys because you have the kids who can't eat the candy, so they get the little dinosaur figurine or whatever.
Okay, that's good. That didn't happen in my day. We ate candy we weren't supposed to, and we got sick and we vomited, and you dealt with it.
And there were razor blades and apples.
Yeah, man. That's why we're so tough generation. Any hoot. So here's why this topic came up, and I don't think Mark, you know this. So I was in Washington, D.C. on a little business trip at a convention. Jason kind of lives near there, so he met me. And a topic came up that I won't bring up, but it was about objective truth, and I think we called it relative truth. I might be mistaking that. Is that
or relativism.
Relativism. And we had a little kind of conversation about it, and I said that'd be interesting for options speak to talk about that. So, topic was more of a social topic, I think, that I thought was a little bit more relative truth than not. I think Jason agreed with that. And then he said, well, an absolute truth is this kind of thing. So, Mark, I'm putting you on the spot relative to objective absolute truth here, especially when it comes to options. And here's my opinion real quick. I think options might have a little bit of both. You guys are at first blush, you're gonna say no, he's wrong. But let's see. What do you think, Mark, about this deal?
So you guys had a prep session about a deep philosophical topic, and now with 10 seconds, I'm supposed to expound.
We only do that to you because you're really smart. You can handle this, or you can say, "I have no freaking idea."
I don't know if this will necessarily be according to the true philosophical definitions of objective or absolute truth or whatnot, but I think the easy answer is to say that yes, the price is the truth, because that's where you can buy or sell at any given time. That is the reality. If you want to take liquidity and you get your order there first, and it meets all the conditions of the marketplace rules, that is where the trade is. Even price improvement, I think, fits into that too, in the sense that even though you don't necessarily know you're going to get it, that truth is because someone's willing to bid high or sell low or whatever. So I think it's easy to say that yes, price is truth. I think it's truth in a more general sense, and maybe even an efficient market sense, in that price over time is true. and that like any given instance of and measurement of that truth is somewhat imperfect, but in aggregate it is true in the like weighing, definition of markets driving towards, this true value of said thing. So I think, yeah, I do think price is absolute truth. It's just more complicated than saying like a snapshot on a time of sales is an absolute truth.
Okay. So here, and this person put in price reveals the behavior of all participants, which is actually absolute. That is true. I kind of agree with that, Mark. I thought about price and truth a little bit, and I was kind of along the same path that, where things are trading is factual, and that's where it is. However, is that what it's truly worth? And does that mean anything actually? Because give you an example. Let's say the Donald says something crazy and the markets go crazy, right? Or all of a sudden the Spooks turn around, they drop 40 points, whatever, and then what our market maker friends may do, they may widen their markets out, and all of a sudden that could cause some unwanted stop orders to trigger, and all of a sudden you get a price fill at a outrageous price that's beyond theoretical and beyond what a true market would be erroneously. So that's a option that trades at a real price. Is that objective truly the correct price and giving us a value?
So I actually wrote a blog in the Till about something kind of similar to this.
Yep.
And my analogy was that like when the markets go really wide, it's because someone's pricing like that. There's no better offer or bid that is in improving that. Like that is the price of spread in the security, given the conditions that, everyone might be aware of. The example I gave was like, I had a bunch of like wet concrete that I needed to get rid of. And it was like sitting in my driveway, and I called one of those junk removal places, and the junk removal guy, the quote is like $99 like on the back of the truck, but they come and it was going to be like $700 to like move this because of like the weight or whatever. And it's like, I have people coming to visit. This has to go. $700 is the price. Is that way overvalued? Yeah, absolutely. But to me, that was the value at that time because I had to pay that spread. I had to lift that offer or whatever. So like, I don't think there are asterisks in whatever the market says as, the basic definition of truth would be my, I think that's value is what someone pays for it.
Okay. I like that. That's good. Jason, any weigh in here from our?
Yeah, I mean, obviously, this is kind of like my topic. We're in my wheelhouse, and I've been biting my lip because I've didn't want to dominate the conversation. But
now you're going to do that.
But now I'm going to do that. Yeah. So
thank you for giving us our fill first.
I mean, when we were talking about this, I brought it up because I said, trading. We were talking kind of more on like the moral side, but then I brought it into trading. I said trading has an input onto this. The price is the truth, and I bring that up because I don't know. I deal with a lot of retail people, and they tell me the economy's going. The economy's going to crap. The unemployment is up. Inflation, whatever, is up. How is the market going up? The price is wrong, and I said. No, I'm all of a sudden Adam Sandler just came to my mind. But
I was just going to say we need to get that clip.
I was like, no, the price is not wrong. The price is truth. You could sit there and try to will it down. You can't change the price just because it is. Now, I wouldn't say that the price is the only truth because, Donald Trump tweeting something is also a truth. He's tweeted something. Whether what he said is true or not is debatable, but he did tweet something and it's out there now. Or he truthed something, however you put that.
Yep.
And maybe, Meta had earnings yesterday. So now there is a different truth out there that changes the price. But who was the commenter who said that the price reveals the behavior of all the participants? I think that's a quote from a famous trader. And when you take all of the information together, all the disinformation too, all of the information gaps, like I don't know everything about Meta's business, but there are people out there that know a lot more about Meta's business than I do. If
Yeah.
I'm trading in Meta, that information gap is also a truth. So there's a lot that you can use in order to predict, I guess, price or have a thesis about a change in price coming up. But no matter how much you try with your mind to will price up or down, you just can't do it. That's too many people. Even very large pockets can't do it because there's larger pockets out there.
Yeah. Okay. I think, it's a little metaphysical little conundrum here. The price at which things trade, that I will agree is absolutely where it's trading, right? Except in the example I gave of the wide market, when it goes back to a normal market, it trades at the new price again. Seems a little bit manipulated, I suppose. But what about the concept of the relative part of the relative truth part of options, and which I mean pricing implied volatility, because that's someone's opinion, right, on where future volatility lies. And is it right? Is it wrong? Is it absolute? We know it's not absolute because the pricing has been wrong before, especially in an earnings situation. It's either priced too low or priced too high. It's hardly ever priced perfectly. It could be close, but it's not perfect. It's someone's best guess. So how does that weave into this kind of thesis, do you think, or does it at all?
Well, can I ask a question to maybe add on to that? Like,
Sure.
what are you benchmarking against? Like, what is fair? Is that the settlement value? Is that what it should be worth now? Like, what's your benchmark for that?
Well, I mean, what I would say in answer to that is each one of the terms in an expiry takes into account that time factor, right? Because we have an implied volatility of 32 days to go. That's already computed into that formula, right? 32 days. So that's what we expect that underlying to move over those 32 days. And again, it's not directional. It's up or down in that amount, right? But I guess my point more is that absolute or relative? That particular concept.
I mean, I would argue it's absolute because that is the absolute expected volatility coming up. You can expect wider or shorter. You could think that it's mispriced in some way, and that's what a trade is made of, right? It's I think this is too low or I think this is too high. But in the end, you can think it's too low and it turns out that it's not low enough. And you have to accept the fact that you were wrong. You can't will it to be, with your mind, you can't, my truth is not the truth necessarily. And that's really what relativism is all about. It's who is determining truth, me or the, global masses.
Sure. I think too that could be a argument that, Mark and I were in the market making side of the business, right? And we have a theoretical value that is, we believe, fairly true at the moment in time. Mm-hmm. If someone lifts our offer continuously, we are going to change our implied volatility, which is going to change the value of our options. And now we have a new truth. We weren't right on the first one, potentially, right? So now we have something new out there. And then just a whole part of edge for us is the difference between where we sell and buy things and theoretical value. And that theoretical value can change. And sometimes you're going to lose money, in which case it wasn't really an absolute truth in the first place, because Vol was going higher and you sold it lower. That happened. That's just part of life in the trading business, right? So, I'm just trying to fit this all into the same peg of absolute versus relative.
So that theoretical value is your opinion on where that price should be, even if it's not there. And I would say a mark of a successful trader and especially a market maker, is how quickly you can realize how quickly you can realize how off your truth is, what your opinion is versus what real absolute truth is. Somebody hits that offer hard and raises that price. All of a sudden you have to adapt and conform to whatever absolute truth is. And I think that is such a huge deal. It's even something, since I started Curios, and it's even partly what Mark taught me when I started Curios is my data is my data. The price is the price. If the price moves against my data, I have to be ready and adapt to that. Not necessarily just say, well, if the data didn't change, it'll come back. I can't just take that for granted. I have to adapt to what objective truth is. And I think, we said this when we were having lunch, is I think it also exercises us, because if I can adapt my trading to be conforming to absolute truth very quickly, I could also adapt my opinions, or, I could look at things and say, oh, maybe I should have not yelled at my dog for barking during a show in order to, maybe I shouldn't be doing that. Maybe I should be more, I should get my dog water instead of yelling at it, or something like that. Like I can adjust my moral or even the reality of how I see reality. The quicker I could adjust to it and change my mind or change, my behaviors, the better off I could even be as a person. And trading is like the gym. To me, it's the gym of virtue. Like I have to learn how to be patient and humble and, all those things. And I find that it does extend to discipline too. It does extend. Since I've been trading, I've yelled in traffic a lot less.
Mark, were you going to say something? I think I'm going to cut you off. Sorry.
I was going to ask a question that was perhaps a little bit less heady, but does the existence of VRP, to whatever definition you believe there's some VRP in the markets, does that contradict the idea that price is truth? In the sense that, to the extent that, the truth should be whatever this prediction of future volatility is that accurate? Does the existence of some vol risk premium say that price is actually not truth in a pure sense? Obviously, in an order flow sense, it doesn't, but
honestly, VRP is folding in the market maker's service cost into the premium of the option, right? Would you say that's what it is?
No, I would say the option market makers compensation would be displayed by the trading a straddle on both sides every single day or whatever, doing the same thing over and over again. Your VIG that you give up on truth is that.
Well, yeah. So think about it in the event space too. So
I don't think VRP is paid to market makers. I think it's paid to some market participant, but I don't necessarily think market makers.
Yeah.
Market makers are pricing, right? They are the ones that price implied volatility, and realized volatility, 30 days in the future is the actual price, right? That's what truth became. And normally that gap is positive, right? Implied minus realized is positive, right? Implied 30 days ago minus realized today, assuming 30-day, right? So because the market makers priced it, that's kind of that. I mean, and this is right now I'm having a learning moment right now, because that's always how I viewed it. I viewed options like a put option as insurance on your portfolio, and VRP as the premium on your insurance that you're kind of paying in case, something, in case it gets exercised, right? In case insurance gets called. So that's kind of how I viewed it. I guess I'm not right.
I think VRP and market making are independent. That I think the existence of VRP is its own ball of wax and discussion, and why that exists, and to whom that gets paid to, and who wants to take that risk of kurtosis, and why people overpay for it. All of that is one thing, and market makers premium that they extract from their participation in options market as liquidity providers is distinct from that, and is closer to a transaction cost.
I see what you're saying. Yeah, because that's more like the market makers is more the spread. VRP is more, I guess you could say, the overpricing of an option, right?
Correct. I think those are two different things. Like I think
Yeah.
you pay to put an option on long or short. And so like in reality, like I know Lex wasn't always long, but like I think a lot of market makers are long. Like I think in some ways they're willing to pay that VRP because they can collect transaction costs, and like paying that VRP helps hedge a book effectively because it's supported by structural alpha in the form of transaction costs.
Yeah, I guess VRP could be then the imbalance between long and short gamma, right? Like normally VRP is high because most people are buying puts. Most customers are buying puts, so you kind of have to bump up that implied volatility.
Well, here, let me throw another wrinkle here. Read this one.
Market Trend ES really wants. Maybe you should go on the show.
Come on, he or she can come on. Relative truth is a result of limited perception. With market makers, perception is superior to most retail traders. Does that make sense to you, Mark?
I would say market makers do have like the best perspective on the markets, and like that's because they have to. Like they're like watching every order book, they're watching all the different levels of what's trading, and like consuming all of that information is an absolute requirement. That's table stakes to be able to price these things so insanely competitively.
Yeah.
And like retail traders should be thankful that market makers are so perceptive about what's going on, because that makes them tighten spreads.
Yeah. That's fair.
They also,
go ahead, Jason.
No, I was about to say, market makers also see the orders coming in before I see the orders coming in, right? Like they see.
But it's not just that.
They have like a privilege.
They see all the orders coming in. So you as a retail person don't see any of that. You might see a big trade. They see every little bit of it. They have noise the whole way through, and noise isn't necessarily noise to a market maker. All of a sudden, it's a beautiful orchestra because they have two-sided paper and they can deal with all that and sufficiently hedge their book.
Well, to be clear, like their perception on orders is all accessible through very expensive data feeds that are available to almost any participant. Like I'm not saying they have any privileged access by any means. Like they have publicly available information. Publicly available information is just insanely complicated and expensive, and process
to the point where it's almost like not publicly available because it's so expensive. Trust me.
Oh, it's a huge barrier to entry.
Yeah.
The ongoing cost to be at that, you have to have membership at all the different exchanges to like get access to, like all of that is huge. But like all of that contributes to them providing. That's why the only feed you could say they have that's privileged and orders they see is retail order flow, and that is giving better prices to retail. Like them seeing it before is actually improving the execution of those orders.
Yep, I agree with that. All right, let me throw another wrinkle.
Now you got me on my soapbox. Jason might be on the philosophy soapbox, but on that order execution soapbox, don't even get me started.
There you go. All right. So there's a comrade of mine back in the day who was, I think I told this story before, I'll say it real quick. Terrible floor trader when we had floors. Outstanding off floor. I'm going to call him a retail trader for lack of a better term. The reason he isn't retail is he's so big. But here's where he found edge as a person looking at markets and not getting on the bid and selling it off. He noticed that on the skew curve that things would get out of line. What the hell does that mean? That means that there is a value for every point on that curve. And how is the value derived? Derived sometimes by something else, right? There's call put parity, there's boxes, there's butterflies. All those things have to be in line, otherwise there's an arbitrage. Occasionally an option would get out of line to him, and it would look like a little blip on the curve. And he would say, that is absolutely incorrect where that price is, and I'm going to take advantage of it. I'm either going to buy it or sell it into oblivion until it gets back in line. Interesting philosophy. Now, my feeling about that is you have to have a lot of money to be able to do that, right? You can't just do it with a one lot because, what's that going to do? And there was virtually no size that he wouldn't take down to pound that thing back in the line because he believed absolutely that it was off.
So that's like an interesting gradient, right? Like I think you could argue that like an incorrect price, like I could almost say like an untruthful, a false price would be something that is a synthetic relationship that is out of line. That like paying over for a call that like the put is offered below that, like you almost could say that that's incorrect. There are asterisks about funding and like, like it's not perfect, even in a synthetic relationship. But I think once you start modeling that and saying like my Sabre spline model with like 18 different factors, like is saying that's out of line, like it's a judgment. Like
I agree with that. I think that's fair. I think when I started on the floor a long time ago, way before you did too, Mark, don't forget there was still this discrepancy in call put parity as well. It wasn't truly understood. We certainly know what we were getting charged interest rate wise. That was a given fact, right? So we knew that number.
Even that's an asterisk, right? Short stock rebate, right? Like that could change. Like that's
could change, right? 100%. But we knew what it was at that moment in time and how to price everything based on that moment in time. Now, if you had that position on, okay, and you were short stock, long call, short put, and interest rates change negatively for you, you're gonna what you had thought you had edge in absolutely is no longer true. Agreed? So all these things moving together, there is call put parity at that point in time, and it is absolute then. But the next second, all of a sudden something can happen with interest rates or dividends for that matter. And now what you have boxed up as an arbitrage that you think is in your pocket and in your bank is no longer true. Right?
Yep.
It's no longer true.
I would say that anything edge can't be a truth because it's based on I don't want to call it a false premise, but like it's a fiction, right? Like it's like the theoretical value that you come up with. Like sure, like Black-Scholes is pretty good, and like there's a lot of like really good math about pricing stuff, and it's overall pretty efficient, and people are using these tools, incredibly powerful ones. But like it's still just a guess. Like a market maker, whoever just uses this guess to like buy and sell at different levels, and like hopefully that nets out. But like it's just a tool. It's not a truth.
Edge is actually from my view, edge is that relative part. That's where your opinion comes in and says, I think price will move. It's not that price is wrong because price is always right. But I think price will move because of this information that not enough people know that will change the price once they know it.
Right. Yeah, I think so there's a little nuance here to I think we're all agreeing that maybe the price that things trade at is absolute. That's it traded there. We get it.
It's market data.
Is the value of that price relative to something? Okay, yes it is. It's relative to a theoretical value that it has a whole bunch of components in it that have some relativism to it as well, right? We think we may know the answer to most things in the model. One thing that is definitely true is the number of days until expiration. That never changes until one goes by, but we already know that. So that one I'll give you as a truism. But interest rates, unfortunately, over the lifetime of an option can change. We think we know what it is today, and we put a value into that box. That can change, but days expiration cannot. So that's one of them that is absolute. I would give you, right? Dividends another one.
Might be the only one.
Change too, right? I think it's the only one, right?
Because you could say stock prices, and it's this next closest, but like at the end of the day, that's just another instrument with a certain amount of liquidity. Like
and finally getting to the end of this, I think we gotta get going here. The way I look at a little bit of absolute is with a box. Okay, you know what a box is, right, guys? I know you do.
Yeah.
Jason,
what's in the box?
So a long box, we have the lower strikes have the long synthetic, and the upper strike, the higher strike, we have the short synthetic. Let's say it's a $5 box. I've covered both sides of interest rates on those, right? Because I've got a long and a short. So I am locking in that rate there. Now it's going to cost me something to carry that, so that could vary over the time. But that $5 box has difficulty trading or being worth less than the $5, less interest rates and all that kind of good stuff, right? Except under a certain condition and a two-part takeover.
I was gonna come in here.
Yeah.
I was
That's
hoping
what-
you were gonna lean into too much into the absolutism, but you know this.
Yeah.
Are you
Yes.
thinking of a 3 for 2?
It could be 3 for 2. It could be anything. So it could be, I'm going to take 70% of this company out at,
Okay.
$100 a share, and the stub is going to trade at 30, and you have a 50 box. Guess what that put spread's worth? That box all of a sudden goes to $10. So that $5 box, and that is a real risk. But again, I'm just trying to get to absolute versus relative, and there's always little wrinkles in every little thing you can think of here with options, right?
Mm-hmm.
So
yeah,
great.
I think like when I brought up, I mean, I'm glad we got into deeper conversations about this, but I think the part that retail or whoever's watching this can take home is you cannot force the price with your mind to do what you think it should do. And the quicker that you can evolve your trading plans and strategies to conform to absolute truth, the better trader and risk manager really you'll be.
Yeah. And Mark, and Jason too, what do you guys feel about fair value in any given time in markets? Do you think it's pretty darn good nowadays? I mean, those markets represent a bid and an offer around some theoretical value. And I'm not saying it's always equidistant, but it's these pricing models are pretty good. But would you think so or no?
Yes.
I think that's why we're having the whole argument that your guy selling that out of whack call or whatever point on the spline. Like, if you're making an argument that that's out of whack that heavily,
Yep.
That's a huge endorsement of how high quality and liquid and price to perfection the markets are.
Yeah, I think that's right. That's fair. Cool.
Can
All
I
right.
leave with one final, not comment, but screen share?
Please.
Oh,
We
Did I throw this wrong?
Let's.
This is my final thought.
The price is wrong, bitch. I love it. Hey, I can't tell you how many times I said that in my trading days on the floor.
He had no idea what he sparked off with that. That's great.
That's awesome. I love it. Very good. All right. Time for advertisements.
Yep.
Go, Jason.
Land for dealer positioning data.
Okay, Mark.
Harvestedfinancial.com for option strategies and the fantastic blog, The Till.
Love it. And then reach me at lex@tradier.com or hub.tradier.com. And don't forget, big announcement, the Tradier SIBO Summit is happening a week from yesterday, which means next Wednesday, November 5th. We start about 10:15 a.m. Eastern time, a full day of things. Don't forget to watch. You can watch it on X. You can watch it on YouTube or go to hub.tradier.com and watch it there. We will have another quiz where you can win $2,000 for your lovely trading account if you are the grand champion. So it's going to be a fun day. Lots of things going on there. A lot of automated bot people coming on this one. So stay tuned. And then one more little kind of peel is that we are in the early stages of a live summit. These two guys, I hope, will be there. This is going to be next year, but just getting the groundwork going, little pre-advertising. It will probably be in a warm climate in the south somewhere, but that will be live. We can see a lot of the folks on the hub down there, among other great educators and people in the space. So keep that in mind. Don't have a hard date yet, but stay tuned. Make sure you subscribe so you can get these emails and pay attention. All right, guys, anything else besides Mark's famous closing?
I happy trading, but price is wrong, bitch.
It's wrong, bitch. All right. See you guys. Have a good weekend.
Take it easy.
See ya.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.